welcome to the Bet Out of Debt show. We have Mr. Patrick Doherty, our accountant for a prestigious accounting firm in Los Angeles. Today, what are we talking today, Patrick?
Hi, good morning. I hope everybody's having a great Sunday. Today we're talking about our favorite stock and its earnings. That it is absolutely blew the street.
Yeah, so if you want a stock pick, we've been talking about this stock over and over and over again, and it proved us right. So let's open the show, Patrick, and let's get into it.
Sure. So it's good to be back on the show. Hope everybody's having a wonderful Sunday. And right now, of course, we're talking about our favorite stock, Nvidia, one of our favorite stocks, and it absolutely crushed the street. Just totally blew them away when they reported on August the 18th of this year. So what is Nvidia? Just to recap, Nvidia is a chip manufacturer. They do GPUs, which are essentially high, very powerful processors for doing video graphics, but they're also branching out into other products and services. So first of all, let's take a look at the earnings reports.
Yeah, and Patrick, when we take a look at the earnings report with Nvidia, I really want to stress how much we have been talking about this particular stock for how many months now?
I think at least 6 months.
Yeah, and we've been saying buy Nvidia. Nvidia, look at its return on equity, look at its return on asset. We have gone to bar chart, show you Nvidia fundamentals. We've shown you Nvidia long-term trajectory over the 200-day moving average. Then Nvidia reported just over a week ago. We were going to talk about it like a week ago, but we had a really good guest on from Las Vegas. And if you want to see that show, just look at the show from last week, Mr. Rivera. And so we delayed this Nvidia segment until today. And Patrick, what you have here, I mean, if you're not a believer in Nvidia after this, then you really have to hit us and let us know why. So Patrick, go ahead and show them what we have been looking at, what you showed me earlier.
Yes, indeed. So let me go to share my screen, share content. So what I want to talk about is how Nvidia absolutely delivered hugely better than expected earnings and guidance. First of all, some of the key points are that fiscal Q2 year over year and adjusted EPS surged 68% and 89% respectively. So that's an amazing year-over-year performance. I mean, that's phenomenal. Like the fiscal Q2 results, Q3 guidance, which is also important in the earnings release, is how the executives feel about the current trajectory of their performance. The Q3 guidance came in higher than Wall Street expected on both the top and bottom lines. And however, one thing to take a look at is the ARM acquisition, which would allow Nvidia to service more in the way of PDA holders, tablet holders, iPhone, and other portable computer holders. So that's taking a little bit longer than expected. However, they still believe, the management feel that deal will come to fruition and should be a part of the Nvidia family.
Patrick, I do not want to miss a couple of those key points there. Can I inject on a couple of those key points?
Absolutely.
So, that guidance, higher expectations on the top and bottom line, which the top line, as we know, is sales. The bottom line is earnings. That is huge for one, but what's even bigger is this ARMS Holdings deal. We have been reiterating it, talking over it, about it just quite a bit. If this ARMS deal goes through, this stock is going to go much further. So I just really want to reiterate that point and before we continue. But go ahead, Patrick, please.
Yeah, so that would be a nice to have, a super nice to have, actually. However, based on the current earnings and profits, Nvidia doesn't necessarily need this ARM deal, at least in its current form.
That is a very great point. Great point. I mean, it is like icing on the cake, but it really doesn't need it. But if it gets it, it's going to be crazy. And we keep saying that. We've been saying that for months. And so
yes, we have.
As far as that deal is still in the work, I guess what I'm trying to reiterate is Nvidia is a buy. And maybe I'm overdoing it a bit, but it's just a buy. And as you go through these numbers, I'm going to try to contain myself because of the excitement behind some of these metric beats.
Yeah, some of these metric beats are just, again, to overuse this word, phenomenal. But anyways, let's get to the numbers. So here are the key numbers during the earnings release. First of all, I know you're going to see fiscal Q2 of 2022 versus fiscal Q2 of 2021. Just to let you know that Nvidia reports in an off month, i.e. a fiscal month for the reporting. So their year end, Nvidia's year end is January 31st, 2022 versus a calendar year end of 12/31/2021. So just so you don't get confused, what 2022 means and what 2021 means.
So in other words, you're saying that Q2 2022 is actually a representation of their recent earnings report a week or so ago.
Yeah, essentially their fiscal reporting period would be from February 1st, 2021 to January 31st, 2022.
Okay, so
that's the reporting period.
Yeah, gotcha. So
now,
I just want to make sure that the audience is clear that
absolutely
Q2 2022 is their most recent. It's not a future projection. All right.
It's not a future projection, and it's understandable. It's understandable how people can get that misconception.
Yep. So we're comparing this last reporting to a year ago.
Mm-hmm.
Please continue, Patrick.
Yes. So right now we're looking at the revenue for fiscal Q2 of 2022 of 6.51 billion, and that's up from 3.87 billion from last year. So we're talking about a 68% increase. I mean, this is huge. This is one of the largest cap stocks in the S&P 500. This is a market cap of over $500 billion. And still, Nvidia is experiencing this kind of growth.
Insane.
Okay, let's go to operating income. So operating income, so just for a term of art, GAAP means like generally accepted accounting principles in the United States. It's just an accounting term. But anyways, $242.4 billion for fiscal Q2 versus 651 million of last year. So that's an increase of 275%. Again, phenomenal numbers, not just impressive, phenomenal. I did say I was kind of use the word phenomenal over and over again, because these numbers cannot be argued with. It's just running pretty much on all four cylinders. If there's a fifth cylinder somewhere, a sixth cylinder, they're probably hiding it somewhere. But anyways, so they just absolutely blew the last reporting period. Net income, 2.37 billion versus 6.2 million, and again, 282%. Keep in mind, again, this is like a $500 billion company, and this is the growth they're still experiencing. And then you have your earnings per share. So that's essentially your net income divided by the number of shares outstanding. And that is 94 cents a share versus 25 cents a share. So we're almost talking like a four-fold or threefold increase.
Now that's where the rubber meets the road. Because
yes.
Why is that important? The reason why that is important is the price of Nvidia stock, what we pay for it on the market, is directly proportional to the EPS. So whatever, and we have gone over that in past shows as well. The price of a stock is EPS times the multiple that the market is willing to pay above it. And so with that EPS growth goes, exponential growth for the stock price, and that growth for the stock price, meaning you made a lot of money if you bought it when it was at 25 cents a share, and now making 94 cents a share. And in the future, we'll be making even more. And that's just the earnings with items. The adjusted earnings is below what the real earnings were. So go ahead, Patrick.
So yes. So the growth phenomenon, not only that just shows that the cash flow per operations is very, very strong. So we're talking about a company that is able to create strongly positive cash flows, and that directly goes into the net worth of the company. So the adjusted earnings EPS is $1.04 versus 55 cents a share. So that's 89% increase year over year. Here's what the street was expecting. An adjusted EPS of 102 versus an actual EPS of 104. So it outperformed there. So these are like the what the analysts were thinking. The revenue, 6.51 billion actual versus 6.33 billion projected. And so Nvidia surpassed both expectations as well as its own guidance. But this is even more important. The gross margin of Nvidia. Now, what is gross margin? Gross margin is essentially the revenues that you bring in less the cost of sales. So whatever it took to manufacture and deliver goods and services to your customers, that's your cost of goods. So that's your cost of goods sold. And then whatever's left is your net profit, or your gross profit rather. So the gross profit went from 58.8% to 64.8%. And then the year ago quarter, that was the year ago quarter, and then the last quarter, it went up from 64.1. So that's the last reporting quarter, reported 64.1. We're at 64.8. So it's up even from that. And then the adjusted gross margin landed 66.7, and that's up from a year ago of 66%, and last quarter of 66.2%. So what's going on here? This means that Nvidia is becoming more efficient in their production. You know, Nvidia has the most one of the most efficient ways of producing their goods and services. And on top of that, because of the shortage of graphics cards and graphics chips, Nvidia is able to control the pricing. So Nvidia has pricing power as well as efficiencies.
Yeah, that's impressive.
So anyways, the breakdown of Nvidia comes through 5 segments that they operate in. You have gaming, which is their largest share of revenue. That came in 3.6 billion, and that's 85% year over year versus change over the last quarter of 11%. So obviously for gaming, that's where you buy your chips for your PlayStations, your Xbox and other Nintendos, your gaming systems, as well as for your desktop CPUs. You buy a graphics card if you can get it. Yeah, for example, the 3080 I think is one of their latest. You go to a component store and they sell you this graphics card in a nice shiny package, and then you put it in to your system, and poof, you get amazing graphics. So, anyways, that's where the gaming comes from. The data center, that's more for AI production and other, mapping, just basically data sharing with others. 2.37 billion, and that's 35% year over year growth. Over the last quarter, 16%.
And Patrick, I know they're competing in the big data centers, chips, and those big, like I know AMS for Amazon have chips in those big data centers, and Microsoft,
Yes.
others, and I know Nvidia has been encroaching in the data center space for on the commercial side, and so
well it's been there. This is one of the. It's grown from nothing to this thing. This 2.37 billion. So they're getting more.
And I know AMD is in that space too. So they're really that's a metric that's really tracked between AMD and Nvidia as far as getting chips. Intel, I think Intel has a large space in there as well. So they're tracking how those chips are, encroaching on that data center chip space and getting business from the Microsofts and
Hmm.
the Amazons and companies that have big data centers.
Then you have professional visualization, and that's essentially 3D rendering. That's outside of gaming. So might be for various applications such as mapping, virtual world, virtual experiences. Um, that revenue is 519 million this fiscal quarter. That's 156% change over last year and 40% change over the previous quarter. Then you have automotive, which is 152 million. So that's 37% change year over year,
Yep.
and down pretty much flat from the last quarter.
Yeah. So that, I mean, they were -1% from, and now they're year over year, 37%. I got you. So the
Yes,
year over year change, 37% from a year ago, encroaching into the
yes,
automotive space, putting those chips in cars.
yes. And then the OEM and IP services. So OEM is original manufacturer. So what they'll do is they'll sell their graphics chips to a card manufacturer, and then the card manufacturer will sell it to at a wholesale level to PC makers, and that revenue is 409 million, and that's this quarter. And that's 180% higher than last quarter, or year over year. Same time this quarter, and change over last quarter is 25%.
Yeah,
So
wow. So in
it's
one
still
year, it
going.
grew 180%. Beautiful.
Yes,
And it's
yeah,
still continuing growth quarter over quarter. Love it.
yes, yes. So essentially, that these are the numbers that are just making Nvidia stock go higher and higher and higher. And if you look at the graph here,
Well, Patrick, let's click out of here for a second. Let me get you here for a second. So
okay,
let's make sure I have. So one thing, those numbers are super impressive. We've been talking about Nvidia for quite a bit. I think we're going to
yes,
continue to talk about Nvidia. There's a couple of things though. One, I know I got in Nvidia around the 400 range, and I actually have the stock, and I also have stock options in Nvidia. My 13-year-old daughter has Nvidia. My 80-year-old my 80-year-old mother has stock in Nvidia. So I mean, we believe in Nvidia here in our household, and it's been doing well for us. I know you own Nvidia
I
because you
do.
call me up weekly saying I'm getting rich, and I know you're up over 70% on your investment. And I'm not sure how you haven't owned Nvidia that long, have you?
I've owned it, probably I started my initial investment maybe 9 months ago.
Yeah, 9 months, and you're up 70%, right?
About 9 months ago, yeah, something
Yeah.
like probably more like 50-60%.
Okay. All right. And so I'm up. Thank you for the clarification because we want to be transparent, honest, very honest
Yes,
here. I think I've owned Nvidia for about maybe a year.
yes.
And on my options, I'm up 270%. And then on my stocks that I own, I'm up over 100%. And so, I mean, Nvidia's just been killing it, right?
Yes.
I got my little 13-year-old daughter, her Nvidia. I think she's up maybe 20%, and we just got that like a couple of months ago. So
Yes.
Nvidia is just killing it. With all of that said, Super P or Patrick, should we get into the stock right now because it's been running like crazy? So,
It,
and we
it's been
talk
running.
about the
Yes.
Bollinger Band is our entry and exit strategy for trading and also getting into a long-term trade. We often talk about the Bollinger Bands. So let's look at the Bollinger Band and let me get your take on getting into Nvidia based on looking at the charts.
Okay. So let me get back to this sharing screen.
Because Nvidia has run quite a bit. And
Yes, it
actually, I
has.
think my initial Nvidia was in the 200s actually. Just my option is around 4 or something, but my initial was in the 200s. So pre-adjusted split, what is Nvidia going for now? Pre-adjusted split?
Okay, so Nvidia split its stock 4 for 1 on July 20th, and stock split adjusted. This stock is at $904 a share.
Right. So the numbers I was talking about were pre-adjusted before the split.
Yeah, so you were buying it at around $400 a share. That's pre-split.
Yeah, so I'm around 100, right?
So so you'd be at about 100 post-split adjusted.
Right.
And right now I'm at around between 5 and 6. So I'm about 150 a share.
Uh, as the cost that you paid for it,
Maybe,
and now
but
it's
no.
trading.
Actually, strike that. I'm at around 132. I saw it on my brokerage account. So I'm
Okay.
about 130.
Yep. And it's trading at 226 now. So, Patrick, let's look at the Bollinger Band and let's see if should we get into Nvidia right now. What's your take? Take us through this.
Okay.
And
Well,
can you show the bottom? Can you show the X row so that we can have a time reference as well? So can you
okay,
pull
sure.
the chart up a little bit? Yeah, yeah, perfect. Thank you, sir.
Okay. Well, generally speaking, when a stock, hits the upper end of the Bollinger Band, it tends to be, you might think, okay, it should come back down because it's going against like the 95th percentile in terms of second deviation. So
Yeah,
that
that's called mean
getting expensive.
reversion, right?
Yeah,
So
it should
mean
mean revert like it did March 29th of this year. So here's where it ran up, and then it mean reverted, and then hit the bottom part of the Bollinger Band. So it contracted about maybe 20-30% here. Keep in mind, this is a very volatile stock, so it does that. That's quite normal for the stock. But then it formed a base here. It formed a consolidation, and then it broke out around late May, and then it just continued to move higher, even though it was hugging the upper end of the Bollinger Band, and continued for at least from late May to about early July. So that's about a month and a half of acceleration, even though it's hugging the upper end of the Bollinger Band. I think that might have been anticipation of a stock split and strong earnings. Those two combined obviously contributed to the excitement of the stock. But here, I'm looking at this here at the upper end of the Bollinger Band. I'm also looking at this consolidation pattern here. This is a very, very strong consolidation pattern. It lasted between July 6th to about August 20th or so.
So about 6 weeks. Is that about 6 weeks?
Yeah, it's about a month and a half. We'll call it a month and a half.
Okay.
And then it broke through this consolidation period and with strong conviction because of the earnings release was so darn strong. It was just, again, it just blew the street, as we discussed earlier with these higher percentages. I mean, the increasing in net margins, gross margins, year-over-year growth, quarter-over-quarter growth. I mean, and beating on the guidance even. This is what's been happening with the stock, and it's continuing to grow and grow. Should we buy the stock at this point? To me, it's hard to say. I really don't know what to say.
Patrick, you pushing. You're evading
It's hard to say.
answer. You're gonna do a push. You're gonna do a push on me.
I think over the long run, it's definitely a good buy because
of course it's a good buy over the long run. It's consistently above the exponential 200-day moving average. Answer the question, Patrick, please.
But in the short run, it may pull back. That's all I'm saying.
Definitely. Can I answer the question?
Yes.
So looking at this, Patrick, if you go back to like May 24th of this year.
Yeah, right around here.
Yeah, come down to the second deviation high, where the Bollinger Band is. So
yes,
and we've talked about the Bollinger Band in nauseum, so I'm not gonna go over that again. You could just look at some past shows, and we have a whole episode on it. But it's on the second deviation high, correct? And look how it ran on the second deviation high. I would suspect there was some sort of catalyst that caused it to run, and it ran out of steam like stocks do, and it mean reverted back to the second deviation low right there, the bottom,
on July 19th.
It consolidated for 6 weeks. We had an earnings catalyst, and now it's running again.
Yes.
So what I would say is you could put some money on the table because it should pull back. So if I had 10 grand to invest, let's say, so let's use round numbers, round big numbers. I would do 3 grand here, a third here, just in case it continues to run like it did on May 24th. I would do a third. I will wait for the pullback, and then I would do another third / remaining there. But I would certainly get into Nvidia on the first sign of a down day. I would not get on it while it runs, but if it take any kind of dip, I would take a nibble. Here's the other thing I would mention. The other thing that I mentioned is the S&P, the NASDAQ are at elevated levels. So it's due to correct. So I do not disagree with you if you want to wait for that severe, 10% correction, because we have not had that since February, right? So it's due, and so the market's going to sell off. So I guess the point is if you want to wait for that 10% correction or more, then certainly this is the stock to load the boat. This is the stock to go out and really invest heavily. So that's my response. What would you like to say to that?
Well, the markets are at an all-time high.
Can you come back on screen, please, Patrick, so I can see you?
Yeah, sorry. Sorry about that, my mistake.
Yeah, no problem.
So the market right now, the Dow, the S&P, and the NASDAQ, those 3 indexes are at all-time highs. So at some point, this is going to correct. Exactly.
Yeah, the market is going to correct. It does it every year.
And then Nvidia is going to come down with it. There's no question about it.
No doubt.
Again, I think Nvidia over the long run, I mean, you're going to definitely reward yourself. you would be thanking yourself that you bought into this company. It's more than just a company. It's you could almost build your financial future on it, to kind of go extreme. But yeah, I would say if you want to nibble at it, that's probably not a bad idea to get some right now. But kind of wait for a pullback to buy maybe a little bit more. And if it comes down more, then you buy a little bit more still. And then ultimately, when the market does turn around, if should there be a correction, and then at the bottom of the correction, the market starts turning around, Nvidia will go with it because there's just simply no chip producer like it at all. Not with these kind of numbers.
Can we go back to your article real quickly, the one that you were showing for the Motley Fool?
Yeah.
I'm going to show something very quickly that was being displayed on the side. I noticed.
Hey, one moment.
And stay right there.
Yes.
Look at the related articles. Can you blow this? Can you make the screen bigger? Related articles that stop. Why Nvidia's future still looks bright after 1,300% return over the past 5 years. Mic drop.
I suppose, yes.
That's what I wanted to show.
Yes.
If that doesn't say it all, nothing does, right? If that doesn't say nothing does. Can I hit that again, Patrick?
Hit it again.
And the future guidance from the CEO of the company is in line with beating what the past performance was. And it's done 1,300% return over the last 5 years. Do you know what that means, Patrick?
1,300%. So that's 13 times your money.
Yeah. So that means if you put up 10 grand, you'll have $130,000 5 years later. You could buy your
that's
I don't know.
A good down payment for a complex home.
Well, you put 20,000, you could have your Ferrari we'd be talking about offline, but that's another story. Put 30 G's down and you have it's insane. So the point is that this Nvidia has done 1,300 over the past 5 years, and they're projecting to have better performance than the past. And the cream of the crop is they're getting ARM's holdings and about to take profits in the cell phone game and personal, those personal PDA electronic devices.
And the portable device market.
The portable device. So insanity. So you can go out of that, Patrick. I really wanted to show that. I mean, that's pretty much it. We keep beating that, that drum about Nvidia, and that's the reason why. And the last point about Nvidia, Patrick, if you can pull the ETF, SMH, and look at one of the biggest holdings in SMH, is it Nvidia?
Let's take a look.
Is Nvidia affected? I know Taiwan Semi is a big holding, and for those who do not know Taiwan Semi, you need to look it up. It's easy to look up. Patrick and I, we are, from the chip sector. We're Nvidia from a foundry perspective, the people who make chips, which foundry is just a fancy name for that, chip manufacturer. Taiwan Semi is your company. But look at this. SMH, top holdings. And that
Well,
SMH ETF, is that one of our favorite ETFs, Patrick?
it is. Well, SMH, and I discussed this in an earlier broadcast. SMH is the number one ETF when it comes to semiconductor companies.
So,
It has a Morningstar rating of 5 stars, so that's the highest rating there, and it pays a dividend, I think, of about almost 2%.
so, so SMH performs really well. It has a big basket of other semiconductor stocks. But if you want to beat SMH, you buy Nvidia. Because Nvidia and Taiwan Semi, I would say ASML and AMD, really makes SMH what it is as an ETF. But look, it's 11% of the SMH holdings in that ETF. So I just wanted to point that out too.
Yes.
Nvidia, Nvidia. You can come back, please, Patrick. You can
Okay.
come back. Those are a couple of points to point out. So, yeah. All right, Mr. Durity. I think that's what we had for today's show. We really wanted to spend the bulk of today's show talking about one of our faves. And in the semiconductor space, it is Nvidia. And not just because we like the stock from afar. You own it, I own it, and my loved ones own it. And it's because of me, obviously, because I'm a big fan. So what do you want to say in closing, my friend?
Yes. So I would say Nvidia is if it gets the ARM deal, then man, this stock's going to be unstoppable. There's no other company that'll be able to really compete with it. But even so, even if it doesn't get the ARM deal, it's still going to be very strong. I mean, as you see those numbers, quarter after quarter, year after year, 1,300% return over 5 years. So that's, take 10,000 invested in, and that becomes 130,000 5 years later. I mean, that's just speaks volumes about the current management, the current product line and service line. It's just crushing the street. Just crushing.
And it's relatively safe to invest in,
It is. Well, it's just
relatively. Go ahead.
It's a gold mine too. On top of that, and it doesn't necessarily need the ARM deal. Just as is, it will outperform.
All right, Patrick. I mean, those are the words to live by for today. So, I mean, that's our show for today, guys. This is the Bet Out of Debt show. We call it Bet Out of Debt because when you place a trade, it's called placing a bet. And hopefully it's a winning one that will keep you out of debt. And like always, we'll see you next week and keep investing.